Well, let's start. Thank you everyone for joining this I think the most important webinar we've had because it's on saving the planet and working on making our climate innovations more successful. So I will go through a quick introductions and then we'll go through the presentation by our partners on how we're going to work to really solve the climate challenge through entrepreneurial innovation. Startup Genome's mission, for those who don't know us, is about increasing the startup success rate everywhere and accelerating the growth of startup ecosystem as economic engines through proven policies rooted in practice, so that the startup success does not depend on your region, your ethnicity, your gender, sexual orientation, identity, or social background. So we've built a network of governments, public and private agencies, and innovation centers that work to increase the startup success rate in the 4 corners of the planet. So now we've really brought together a group of partners, and together today, I'm really excited to launch Entrepreneurship for Climate, the movement that has for mission to solve the Cleantech Scaleup gap standing between us and net zero through global network solutions. So with me today, we have several of the founding members and speakers who will bring, shed light on the different issues and the solutions they are working on. Here's the founding members of the Entrepreneurship for Climate. Of course, there's some in North America that cannot join us today at this time, and many, of course, in Europe and Asia. So we have Richard with us, Matt Toner, who is the former deputy leader of the British Columbia Green Party, and Sylvain Carl, who was at Second Muse, Patrick Gagne, CEO of EcoFuel, now Cycle Momentum, which is a clean tech accelerator, Catherine Bérubé, who's at Cycle Capital, the largest clean tech fund in Canada, Bianca Dragomir, CEO of the Valencia Clean Tech Cluster, in the Cluster Manager of the Year, Charlotte Breen, who comes from the C40, and Frans Nauta, who's with us, Matt Lewis, who was former head of communication of ClimateWorks, and Fred Walty, who's CEO of ENGIE, which is a global network of incubators and accelerators. The Entrepreneurship for Climate, number one, we believe that entrepreneurs and startup ecosystems must lead the fight against climate change, that the innovation will come from them and the solution and the impact will come from them in majority. And we also believe that the innovation gap that Bill Gates talks a lot and many talk about is real, but the scale-up gap is more important. Some say that if we could scale all of the innovations that already exist, we might be close to net zero already. So without scaling, no impact. And that's been the problem that we've seen historically. And that the solutions will come from global network solutions, us working together across our, sometimes siloed or sometimes adjacent networks to bring expertise, capital, and public policy together. So as I know you believe and you support all of that, please go and sign the manifesto after I take 1 minute at this address, and Hannah's gonna put the link in the chat. But at Startup Genome, we've done research starting with Steve Blank and Stanford University, Wharton, Berkeley, and showed that the success rate of startups really depends not only on resources, a number of startups, and funding and talent and all that, but on network multipliers. And these network multipliers multiply the economic impact, and there's the global connectedness and local connectedness. And those networks multiply the success. And what we do together is more important than what we do alone. I always like to say that, the chance of success of Zuckerberg, if he started Facebook in a small city or country in Africa or in Latin America, what do you think would be his chances of success? 0, 1%, right? It's not Zuckerberg that created Facebook. It's really Silicon Valley and the startup ecosystem that is globally connected to the rest of the world. So the bigger, and that's the local startup ecosystem, us working together with with customers and suppliers and investors and startup support organization and talent. And then the bigger we is the global connectedness. And we've done a big research to quantify and measure this global fabric of knowledge between entrepreneurs that transports the ideas and the people together with knowledge across organizations. And that is source of scale up potential for startups, that global connectedness. The more connected we are to this bigger we, that is global fabric, the more we can create globally leading business models. And then we've seen that this scale up potential is translated and realized through global market reach. The startups have a globally leading ideas and they become leaders only if they go on global markets. And ecosystems that are globally connected are much better able to create global market reach, global traction on the markets. And you can see there's big and small ecosystem at the bottom left and top right, but you know the relationship holds across sides. So now what are those challenges we're talking about? First, we see that angel funding is hyper local. And in every small ecosystem, there's too few of them that are clean tech experts, which makes it very hard to raise sizable round and have access to their industry expertise and customers. It's very hard to get a series of climate-driven lead customers, you know, and that's why we need demand-side policies. The clean tech funds, when we look historically, they've had very low returns, and it's probably because they're not very well adapted to the needs of clean tech. And lastly, the clean tech founder community lacks the global scaling skills and business network that has been developed over decades of exits in the software communities and the hardware communities. So the solutions, we call them the elements, the 4 elements of solutions, is first the global green angel networks, the earth, the nutrients, the demand-side public policy, which is the water, the large and patient capital, which is the firepower, and the global scaling skills and network, which is the wind and the sails and the air. And when we look at the angel funding, we see that the percentage of privately seed-funded startups in each ecosystem is directly related to the exit rate. Extremely, amazingly related so. And it's because the angels bring not only capital, but business expertise, industry expertise, and when they're ready, the introductions to large customers or channel partners. So imagine a global green angel network that allows you to have connections with utilities in other countries and expertise from them and how useful that is. The second one is the lead customer challenge. It's very hard to get a series of climate-driven lead customers. And local governments usually support local solutions. Corporations are rarely lead customers. So we need a demand-side policy and procurement network that works in the governments that work together, not to create a lot of experiments, one-off experiments that die, can't scale, but actually a series of lead customers together that create traction and startups that deserve Series A and B. Thirdly, the growth capital challenge, and 2 of our speakers, Paula and Nigel, will talk about this today. But returns have been really low because those venture funds have been traditionally structured like the software funds. They're not patient, they're not tailored. Do they have the right instruments? We'll talk about this today. But that's the firepower, this adapted, large and patient capital that comes from foundation, governments, private investors, but allows the startup to reach the scale economies and price competitiveness. And lastly, the gap in global scaling skill and business network. And we're working together to create scale-up programs with some of our partners here and who are not here. But there are still too few very successful exited entrepreneurs in clean tech. And they don't have access to a global business network that their software brothers and sisters have access to. And there's not enough partners within their community, mentors within their community. And that's the win in the sales, that business network and that scaling skills. So these 4 elements is what we're going to work on together. And what we're going to do as a solution on top of that is, because we published the most read startup ecosystem report in the world, reaching 600,000 readers, 30% of startup founders, we will put a spotlight together with the E4C founders and partners here on the clean tech startup ecosystem and the policy actions of their governments. So we're going to publish in October the first global startup ecosystem report and probably launch it at the Cleantech Group European Conference in October to shed light on startup ecosystem performance, national policy action, and also insights from all of us. Now I'd like to pass the mic to Richard Youngman, who is CEO of the Cleantech Group, to talk more about these issues. Thank you, Richard, and please tell me when you want me to advance to the next slide, since I'm in control here. Thank you, Richard. Welcome. Richard's joining us from London.
Sure thing, Jeff. Thank you. So I'll make some opening remarks. I think the idea here is we each make a few opening remarks and then get into a longer conversation. So across mine, I'm going to cover three things. Very briefly, who are we? Secondly, how do we see this problem? And three, what are we doing to help? And we'll get into sort of more detail maybe in the fireside chat. But on who are we, I think the key thing to take away is our longevity. We've been at this since 2002. We're not an investor, we're not a trade association. We provide research, consulting, and events. But I think the more important part for you today is to know, if you don't know us, that because of this 20 years, we really are a global authority in terms of network of contacts and knowledge about what has happened in this theme, this innovation theme. So if we move to the next slide, the second part I want to picture to you is the fact that Cleantech is way more than energy and power, always has been. And there've really been four phases of innovation. If we can advance to the next slide, Jeff. I would characterize those four phases as follows. When we started in 2002, the early 2000s, we were pioneering. We were frankly explaining to people what the whole idea of this innovation theme was, why anybody might think about starting a business or investing in it. We moved into a second phase, which really sort of triggered those returns that JF was referring to of early clean tech funds. I would describe it post hoc as a kind of get rich off the solar boom phase, where people thought that because there were 2 or 3 successful IPOs, people could make a lot of money fast. And that dissipated pretty fast for various reasons we could talk about. We entered the 2010s in a period in which 3 key things were going on, in my view. One, the hype had gone away. So in Gartner's terms, we were in the trough of disillusionment. There's no doubt about that. But 2 other really key things happened. I think there was a lot of professionalization, a lot of setup, a lot of establishment of accelerators and incubators and programs to help entrepreneurs in this theme. We'll probably hear about 1 or 2. And the second was that the corporation, the large corporate, the industrial, became interested in open innovation generally and in this theme particularly. And they played a very important role, I would say, in keeping, if you like, the flame alive for the first part of the 2010s. But things have improved a lot. We hit the 2020s. This is phase 4, where, frankly, the ingredients in terms of innovation are all there. There is supply of high quality entrepreneurs. You could talk to any investor in this category now and they'll tell you how much that has changed. And in the last couple of years particularly, it is awash with capital. The problem we have is that we now need to move at absolute, what I'd call warp speed. The demand has to be identified and these companies' solutions scale, because we're not dealing with any ordinary business problem here. We're dealing with an externality that scientists will tell us has a very defined timetable. So we move to what are we doing? Well, I mean, on an everyday basis, we continue to do what we've always done, which is supply the information about startups and so forth, help corporations and government agencies think through how they play in this space. But I think the point today would be more about we're trying to create new conversations. We're trying to be in front of new audiences, because the realization is innovators cannot do this alone. They will be a key segment if we can supply the playing field that helps them solve the problems we want to help, we need solved. So moving to the next part, in the spirit of looking for new ways, we have got much more involved of late with policy. With the support of the Breakthrough Energy Initiative, we launched Cleantech for Europe earlier this year, which is essentially a conversation between the policymakers defining the EU's policies and the innovation community. A conversation we feel has been lacking for a long time, if the EU wants to live up to Ursula von der Leyen's man on the moon moment, it's going to have to create really different and quite brave policies to unleash innovation. I can talk more about it. If we just go to the next slide, I will just make 2 comments and we can get into more detail perhaps in the fireside. But in EU terms, just to picture the scale-up gap, I mean, Europe accounts for its fair share of seed and early stage capital in this theme, around the 22–23%. But on the right-hand side, you'll see that there is just 7% of global scale-up capital hits European companies. So that's one identifier of the problem. We've looked at various areas, and on the next slide, I mentioned green hydrogen, and happy to take a couple of questions about that or others of what actually policy could do. But here, if we're serious about green hydrogen, we need to be serious about where it is today, which is at a high cost and in very low volumes. And we need to go about this in a very deliberate and predictable fashion for both policy, corporations and capital to play and scale the solutions that again exist. Perhaps something we could come back to, JF, in the fireside chat later.
Thank you, Richard. And then I'd like to introduce Frans Nauta, who is the founder of ClimateLaunchpad and has extensive experience working with governments and startups all over the world. And maybe Frans, you can give an intro a little bit to ClimateLaunchpad and Climate
Sure.
Kick that you were also a founder of.
Yeah, happy to. And thanks for organizing this, by the way. I started working in sort of cleantech startups about 10 years ago. I was lucky to be in a position to build a startup program with EU funding, the Climate Accelerator. And from there, I created the ClimateLaunchpad. ClimateLaunchpad is really business ideas, early stage business ideas. Climate Accelerator was for entrepreneurs that were already on their path and got some early stage funding. So that's the difference between the two. And maybe the key thing I've learned from ClimateLaunchpad is that there's a surprising amount of entrepreneurs who would love to dive into the challenge of climate change. So the program was meant to be 1 year. It now is in its 8th year. It was never meant to go out of Europe. We started with 10 countries. We thought that was pretty cool. But now it runs in 60 countries. And that's not because there's so much funding for it or that we had a brilliant strategy or that it's an amazing idea. It simply works because there are so many people in countries that want to sort of pick up on this challenge. And, you know, I always thought this was a rich country thing, but we have the most applications in emerging economies. So when Kenya joined, they had more entrepreneurs applying than I think Germany, the Netherlands and France combined in 1 year. So there are lots of entrepreneurs who would love to dive into this, and they all do, many of them do. And the problem I have, and that's why I'm also excited about this initiative for Entrepreneurs for Climate, the problem that I have is that we're not really offering them a fair deal. So if you want people to be entrepreneurial and say, hey, you know, solve this societal problem for us, if they do it through a startup, there needs to be a real market opportunity. And there's a mismatch, I would say, in governments talking about trying to fix our carbon problem and what they put in place in incentives. Like it's kind of hard to explain that there's still no sort of basic value-added taxes on airline tickets, for instance. That's basically a subsidy for a very polluting industry. So the good news, of course, is we have amazing successes in wind, in solar, in electric cars. And if we want to have what happened there, lots of new companies moving into that space and giving it a boost. And then for electric cars, what we're seeing is that existing companies are actually moving in We've seen that with wind too. For instance, Siemens was a late adopter of wind energy, but then acquired a Danish company and is now one of the bigger players in wind energy. So if you want that dynamic to play out, you need a framework in place, what I call deployment-led innovation. And what it does, it creates a market for solutions that we as a society want, but that at the moment are still too expensive, but that have the promise in them to become cheaper over time. So solar is a perfect example. Since the mid-70s, when you could buy these panels, they've reduced in terms of pricing 99.9%. Lithium-ion batteries decreased in price 80% in the last 10 years. So we know how this process works, but what we need is to have a way in place for somebody to pay the most expensive part, which is the development phase. And that the incentives are there for at least 10 years. So Denmark did that for wind, Germany did it for solar, and then China took over. Electric cars, I would say, was the state of California with Norway and the Netherlands, a few other countries that really incentivized electric cars. And then, you know, we'll fix this thing. Climate change, of course, is super complicated. It's not like one virus. I'd say it's 1,000 problems. In order to solve it, we probably need 100,000 entrepreneurs. Well, what I've learned is that the entrepreneurs are there if we just offer them a fair deal. And I'm happy to explain more on how I would do that in detail. But I think the key takeaway for anybody that works in a city level or that works in a national government is that it is the most amazing economic opportunity of the 21st century to fix parts of these puzzles. Just imagine oil. We'll get to a point where we won't be using oil anymore. We'll simply use CO2, and based out of CO2, we'll make the stuff we need, whether it's kerosene, whether it's plastics. The first country that can make kerosene at scale out of CO2 is basically the new Saudi Arabia. And so the economic opportunity is dazzling. And I'm kind of surprised how slow most countries are moving. So I would challenge some governments to join our E4C and become leaders in this space and get the green jobs and the green economic growth that is basically there for the grabs.
Thank you, Frans. Thank you so much. Yeah, we'll go deeper during the fire chat. And next is Paula, Laine, CEO of the Finnish Climate Fund based in Helsinki. Thank you so much for joining us, Paula, and please tell us what your organization does and what are you working on to help those startups scale.
Thank you. So I think the Finnish Climate Fund is an example of a policy trying to provide this patient capital for the scale-up gap problem that was already brought up. So basically at the core of it is increasing the investment to solving the climate change problem and to do it in a way that complements the other policies that governments already are using. Let's go to the next slide already. So the Finnish Climate Fund is a state-owned special assignment investment company focusing on climate change, low carbon industries, and combined to them also promoting digitalization. And we provide capital loans in large-scale projects where our funding enables the project to take place in the first place or to be implemented either earlier or at a larger scale than it would without our funding. So that's our positioning with our funding. Next slide. So we have two investment categories. First one is scaling up the deployment of climate solutions, where we operate on subordinated loans, which may or may not include also conversion options. The ticket size for our investments in this category is from 2 to 20 million euros, which typically hits the space where you for the first time have to do a one-off bigger investment in scaling up. Then the other investment categories, platforms that enable emission reductions, where we operate also with subordinated loans, sometimes with conversion options, with ticket size from 1 to 10 million euros. The typical investment types in these investment categories is in the scaling up is first of all capex investments to facility build up. So this would be like the first bigger scale or industrial and commercial scale facility investment, quite typically. Then also we are very much agreeing with this analysis that was presented, that quite many of the innovations needed already exist. The problem is more how to speed up dramatically the market take-off of those solutions. And in those, in that phase also, we offer this sort of working capital for the existing physical solutions to get faster market take-up. Then also the third typical type would be then a scale up of digital climate solutions. So then these platforms that enable emission reductions, the idea here is that there are some bottlenecks where the platform itself might not be a hugely appealing and hugely scalable business in itself. But these platforms can enable an ecosystem of growth companies to build scalable climate business on top of these platforms. And these platforms can be either physical assets or sometimes also digital assets. So they can be, for example, this sort of shared shared physical infrastructure, for example, in carbon storage area, or on the side of the digital platforms, it can be, for example, combining and making available public data that enables digital climate solutions, scalable digital climate solutions. So these sort of a platform investments is the other investment category for us. So then the next slide. We operate on a 3-step investment criteria, which means that all of our investment decisions go through the same set of criteria, which has 3 steps. There's 3 preconditions. Then we have our impact targets and impact criteria, and then we also do this sort of a target-specific impact analysis. The preconditions include this sort of a commercial credibility, where in our case it has to have like a credible plan of, for example, being able to pay back our subordinated loan. However, our time frame is much more patient that you would typically see from private funding. We also want to verify that there is this added value from this public funding from climate change as a precondition. And then also as a precondition, we do this EU taxonomy's do no significant harm principle, which means that that the target cannot have adverse effects on environment on any of the 6 key dimensions of the EU taxonomy, for example, water or natural resources. And then if the target meets the preconditions, we mostly make our decisions on these impact criteria, and most important of which is obviously the emission reduction potential, but then obviously also combined with growth and productivity potential. And at this stage, we also check whether the target is fully compliant with the EU taxonomy framework or not. So then moving on to the next slide. Just at the end too, but hopefully a bit more concretizing examples of what types of decisions this kind of policy approach can produce. So here's 2 of our recent funding decisions. So first of all, Solar Foods, which is a disruptive protein production innovation, actually goes very close to what I think Richard was mentioning, that we will produce everything from CO2. We will also produce protein from CO2, and Solar Food innovation is actually linked with that idea. So this is a 10 million euro capital loan for Solar Foods to build a large-scale demonstration facility in Finland. And then the other example here is Elstor, which is an example of our scale up of deployment of existing physical climate solution. So Elstor is a container-sized storage, which can store, for example, locally produced renewable energy into heat actually, and it produces either heat or steam for industrial processes. And here the bottleneck is that the build-up costs for one of these Elstor units is several hundreds of thousands of euros, and they are really big investment for the customers that the Elstor needs to sell to. So we are actually providing a financial instrument to Elstor, which provides them with working capital funding for building these Elstor units when they have identified the suitable customer, which then removes the funding bottleneck for making these Elstor units and speeds up the market take-up of the Elstor solution. So those at the end as hopefully two more concrete examples of how we are from our small part trying to tackle the scale up gap in providing patient funding and being as a complementary policy approach from the state of Finland. Thank you.
And Paula, thank you so much, Paula. And can non-Finnish startups apply to be funded by the Climate Fund?
Yes, they can. There is certain emphasis on the benefits for Finland in our criteria. The emission reductions are always global. So we always look at the global potential for the solution to reduce emissions, which gives like a level playing field, obviously. But then when we look at more of the productivity, for example, and growth prospects. So there we do have to take into account that what are also then some of those productivity or growth benefits that can be either directly or indirectly seen from the Finnish perspective.
Thank you so much, Paula. And our next speaker is Nigel Purcell, who is Investment Director at ENGIE New Ventures, and he is joining us from Paris. Thank you, Nigel.
So thank you very much and great to be here. Maybe just to introduce myself and who I work with to give you an idea of how we approach this issue. So I work for a corporate venture capital fund called ENGIE New Ventures. This is a fund size of 180 million that's been going since 2014. We have 28 investments to date, of which 6 we have exited. Generally, we have a check size anywhere between 1 to 10 million, with an average investment in companies between 2 and 4 million, with a sweet spot anywhere between Series A and Series B. We do go earlier, we do go later, but it depends on the circumstance. Importantly, because innovation is local, we have a presence worldwide. We have some investment directors here in Europe, also in San Francisco, based in Chile, Israel, and Singapore. It's important to note that we are clean tech investors, and clean tech to us means that our investment themes focus around energy efficiency, green gas generation, EV charging infrastructure, integrating renewables into the grid, and also digital tools to help our renewable generation assets be more efficient. I think so. Maybe just that's a quick introduction of the fund and who we are. I think it's important, to come back to Richard's point about how do we see this problem. And we see it that we're a CVC fund as part of a large French utility. And we see that good ideas do not lack for finance, that there's plenty of ideas out there, plenty of innovators out there. And as several of the speakers have said in the last few minutes, one of the key themes is how do they get access to the market and how do they grow? And one of the things about clean tech investing is that your customers can be utilities, and indeed your customers can be B2B industries that are resistant to change in some aspects, and also incredibly slow to onboard new innovative technologies, just sometimes because the incentive isn't there, and also because the market and the payback for renewables versus what you have there existing at the moment is not quite as strong as it could be. So what we see is that if you go with a CVC or an existing customer of these, or existing client of these B2B customers, i.e. someone like ENGIE, that they bring credibility, they bring brand, and they give you essentially market access. And this can be golden to an innovator. These incredible people can be very creative. They can get access to finance. They can have a wonderful idea. The timing can be right, but if you don't have access to your market, you're in trouble. Everything really has to come together, and for that, we think that we can give a leg up to these different companies that we invest in. One of the key things is to look at the flip side. What's the motivation for a CVC? So we would have a double bottom line. One is financial, of course, but also a KPIs for success is how much business do we do, or how much work do we do, or what's the collaboration between us and a portfolio company. And this is a super important metric for us, because that really is success. One of the things that we always look at when we look to a startup is, why do we invest? Why not just partner? And we call that the strategic rationale. And the key thing for us is, we get a look at an early stage, potentially disruptive technology. We get to build a relationship with that innovative team. We get to build a relationship with the technology, more specifically an understanding of that technology to de-risk it when the market that it's attempting to disrupt appears or becomes more mature. And we see that an investment allows us to participate far more deeply, or in a far higher level than simply a partnership. Once you have skin in the game, you're really, really committed. So I think that's just an idea of how we see, let's say, our role as a CVC in this ecosystem. One point that has come up from the other speakers, and I think it's important to touch on it, is the time to scale and what exactly is patient capital. Things are not necessarily quick in clean tech investing. This 3-4 years, it's certainly longer than that. In our experience, it can certainly be a 6, 7, 8+ year journey, and funds are structured that way, and indeed need to be structured that way. And the investors need to realize that they need to be in it for the long haul. This is not a quick journey. So patient capital for these innovators, or for these companies, innovative companies, to be able to build is hugely important, and I think everyone needs to recognize that. So that's it for me. I'll leave it there, and happy to take any questions later on.
Okay, thank you, Nigel. So it's time now for a fire chat, and please post your questions in the Q&A function that you see at the bottom of your screen. I'm still wondering how I can read those questions. I'm sure Hannah will help me on that. So what I'm really curious of, and making the scaling opportunity and gap, maybe more clear, more tangible. Frans, can you tell us, as you reflect back to the last, several years ago, and the winners of the ClimateLaunchpad global competition, what differentiates the winners from the ones able to scale versus the ones that have not been able to? Do you see any trends that this can help us with?
Yeah, let me give two examples. So one is electric flight, and the other is doing stuff with CO2, so carbon capture and utilization. So in 2012, I met a team completely not qualified to be involved with flying on batteries. One was a former DJ from Berlin. He was heavily tattooed, and the other was a field engineer. But they were totally dreaming of flying with a big drone, basically, electrically. And well, it was very clear to me this was going to be a failure, but I didn't have arguments to let them into the program, because we were pretty open, and the selection committee had somehow accepted them into the program. And then they showed me a video of them flying on a very tiny structure with 18 propellers, and they built it on a yoga ball, and everything looks very scary if you see those early prototypes. Right now, their company raised over 200 million. It's called Volocopter, and I just bought a ticket from them to be one of the first customers on when they open their Dubai taxi service. So it's supposed to be an autonomous drone. Well, it might be a few years before it gets there, but what we've seen in electric flight or sort of greening aviation is that the I
think we've lost Frans momentarily here. So let's go to the next question and wait for him to unfreeze. So one thing that we didn't talk, I think, enough, and Nigel touched upon it, but I want to know maybe from Richard, what to start us off, what is the role of corporations?
I'm back, I think, yeah.
Here we go. Spock is with us, and now Frans. If you want to finish it, maybe I'll go with Richard, Frans for now. So Richard, can you tell us what is the role of corporations? You work a lot with them and you try to link them with innovators. What's their role in helping those innovations scale?
Well, I think they're absolutely critical. Nigel touched on sort of why, but I think to try and take it further, and despite they're my customers, if I was in front of any of their CEOs, I would be championing for a complete mindset change. The pace at which they are doing this is going to be way too slow for most of their net zero commitments. We've started to see, Shell being an example, companies ending up in court, and I don't think this is going to stop. So this is a problem for all of us, and we should see it like that. No one's the enemy here. We need agents of change, and agents of change, unfortunately, requires business practice change. We have never, as a human race, taken on a problem like this before. But we either embrace it or we don't. But we are not going to do it by business as usual type scaling. We are going to have to be pretty brave in some of the actions we're willing to take to live up to what these big corporations are saying to their shareholders in terms of net zero commitments, and political leaders indeed are saying too. So there are people out there who, for example, look at ENGIEs, but maybe less ENGIE, maybe more the kind of fossil fuel community as the enemy. I don't. I think they've got a role to play if they want to play it, because they actually know how to do industrial scale. Startups do not. One last thing might be, look, the vaccines has taught us that if you set the conditions for innovators to go and solve a big problem fast, it can be done. You just have to be willing to accept that it's an experiment, that there are going to be failures along the way. But if the problem is big enough, the common good is big enough, be it for an industry, be it for a country, be it for the globe, that's, I think, the reality of where we are. So I'm all for them. I just think it's going to require a very large mindset shift in management.
Thank you. Anybody else wants to continue on that?
Am I back?
Yeah. You're completely alive now. Not sure you can hear me though. Paula, any comments on the role of corporations within the structure that you see as coming with capital as a solution to be able to scale those companies, those solutions?
Yeah, for sure. Well, first of all, I think they are very often the customers that obviously the new, more disruptive solutions need, and quite often the newcomers are currently mostly because of the policy frameworks that are not yet perfect for incentivizing the sustainability innovations. They are at a disadvantage quite often from pricing, for example, and obviously technology risk and many other reasons. So I kind of understand extremely well many of the problems that the corporations face in adopting the more disruptive solutions. And in those cases, for example, I truly think that this sort of more risk-taking patient, sometimes public capital can make with, for example, this working capital financing it a bit more easier for the new solutions to reach better conditions for those demanding corporate customers. And then obviously the other side is that bigger corporates themselves, on their more riskier side of their product portfolio and their own innovations and scaling up their own innovations, I think that they actually face quite similar challenges as the more disruptive startups, right? So similarly there, obviously having good collaboration, negotiations, and enabling a risk portfolio for the big corporations to be a bit more bolder, bit more leaning forward with their more riskier adventures with disruptive innovations is equally important.
I guess as you pick innovation and startups to invest in, you probably look at the environment and the customers and whether those corporations would be supportive before you write the check, right?
Well, it depends a lot of the solutions. Obviously, some of the disruptive solutions will not find their friends on the existing players, right? So it depends obviously a lot of what we are talking about.
Yeah. Okay. And, also, Frans.
Sorry, my electricity dropped, so everything was gone. A thought here is that I think what we can learn from Tesla is that if there is proof of something as an alternative to the current technology, it becomes much easier for politicians to regulate tighter. So without Tesla, we would all be driving hybrids now, and not even plug-in hybrids, right? We would all be driving the next generation of the Prius. But the reason we're shifting to electric cars is because a small startup grew into a big company and proved that you can actually build a really good electric car. And then the Germans basically gave up lobbying for low standards, and politicians became more brave and decided, okay, let's move in. And that now has generated 300 billion in investments in electric cars. So what you often see, I think, is that somebody has to prove that you can actually do it before politicians will do something bold and do something that means a shift. So what we'll get with carbon regulations is incremental change. What the startups can bring into the arena is the proof of dramatic change being possible. So that's why I like working with startups so much.
Yeah, so the role of government is also then to pick. You said like as they saw the solution emerge, they had a role, but sometimes also we want them to maybe be in the leadership of opening the market, creating the market. And how do governments are supposed to prioritize those opportunities and say, okay, we have 50 policies we could enact, which one should we enact first? How do you think about that? Frans, Richard, everybody here, Paula, Nigel, do you help governments doing that, and how do you propose that they do?
I would start with your current strength. So the reason why wind makes sense in Denmark is because if you look at the wind energy potential map or atlas of Denmark, it has amazing potential. Solar in Germany, much less. And basically the industry didn't stick, but that also has to do with how China subsidized the development. So I would always start in a place that fits with the sort of the starting point that you have. So let's say for Germany, automotive, makes sense. Anything transport related makes sense. For a country like the Netherlands with a huge chemical industry, it would make sense to say, well, shouldn't we be leading the transition from oil to CO2 as a resource? So it really
Can we
helps
talk about regional strengths in it instead, so we can have an alignment of many countries? Because what we see is that if a small countries do a demand side policy, that's probably not enough, right? So Richard,
I don't agree, because
how do you?
I don't agree.
If it's
Europe
Germany,
is very
it's
good.
medium-sized.
Europe is very good in frameworks, but very
Yeah.
poor in implementation because it's not how it's set up. Denmark is a country of, what is it, 7-8 million people, and they created the wind energy revolution. So, you know, small countries can do pretty big things. If you look at Finland, Finland has 80% cogeneration, the highest number of the world.
Yeah.
There's no country in the world with more cogeneration than Finland. The move from gas to hydrogen is best done in Finland as a fuel for cogen. Maybe you want to do something else, but if I would be a politician in Finland, I would think, we have a resource here. We have this whole installed capacity. We have an industry that knows how this works. We should be the first country in the world to go green in this specific area. I think that would make perfect sense. And I'm sure Paula agrees.
Well, I think, yeah, I think it's a combination, obviously, and we need like a balanced policy framework where the starting point is the generic framework conditions that hopefully, you know, incentivize these sustainability investments enough. And then you can go to these industry specific policies. I think that would be a good example of this sort of a starting from strengths and choosing an industry specific policy approach. And in some particular areas, I think you do need several of those two as well. But then, I mean, even narrowing down from that, then you can have like some even more targeted, but even there I would use this more like this sort of open call or challenge competition type of approaches again, and so on and so forth. So I think it's a combination of different policies on national level where I tend to agree that you can, as a small nation, do these sort of bold choices and put a lot of focus in the certain area if the market opportunity is global, right? It doesn't matter if your own home base is small if the market opportunity is global. And obviously your ecosystem and your value network, you do need to, from the start, build globally.
Yeah, thank you, Paula. Richard, you always talk about the fact that policy, demand side policy is so important. Taking a global view, do you think that alignment between countries on policy can have even a bigger impact and faster?
Ultimately, for sure. I mean, I think I would distinguish between policies relating to technologies that are proven and ready to go, where global alignment would massively help, versus I think what Paula and Frans are talking about are more sort of beachhead. How do you stimulate the early market, in which case, yeah, sure, a country, however small, can make a big difference. And one of the things we've been pointing out to the EU about the scale-up problem is it's very hard to scale a European company because the regulations and everything is so different border to border. And that would be an example where alignment in these sort of so-called future industries would be massively helpful. If you want, if you're serious about so-called creating the jobs of the future and the European champions. So you got to distinguish where we are, right? EVs are in a totally different place to, say, hydrogen. Hydrogen requires that early push to help electrolyzers, frankly, get to the cost that makes a market take off. But Nigel's probably better positioned to comment on that.
Nigel?
Maybe to address your original question there, the start with the strengths, I really like that. What I find from the policy aspect is that sometimes the dots aren't always joined up, as in the industrials aren't talking to the policy people and the policy people aren't at the tables where the industrials are discussing and the industrials are chatting together. I often think that, in these types of conversations, there can sometimes be why not have a policy person and to give them our perspective and also to hear theirs so that we understand each other. So I think inclusion in the conversation, in these kind of conversations, is also important. One of the other things is coordination at all levels. So some things are best done at European level, some at country level, some at local and regional level. I think this is quite important as well, and to have all those actors basically informed as to what is going on in the innovation ecosphere. But what I always find, what I'm always cautious of, is that if you put innovation in its own little basket and put it in a corner in a room and close the door and hope something magical happens, that's really the wrong way to go about it. Innovation needs to be really joined up with the outside world. But equally, it needs its own space to develop, but you need to have a connection. And I find that is a difficult thing to do, but it's super important to bear in mind that if you don't have everyone else bought into what you're innovating on, at some point, you're just not going to work. It's just not going to work because, you know, as I said to it earlier, you need the product, you need the innovator, you also need the timing, and also you need the customer to want to purchase eventually what you are innovating on. And that magic mix has to come together, and that needs to be coordinated and set up.
Thank you, Nigel. And I think this is a great conclusion with for all this discussion of our speakers, but also of why we're creating this Entrepreneurship for Climate movement, because Nigel was talking about, you know, the policymakers, the group of governments that work with us, for instance, Startup Genome, need to talk to the large corporations that will create sometimes this opportunity to apply a new innovation in a bigger system and scale it and bring the scaling skills, and need to talk to probably the support organization, the investors, to see if they're aligned so that we can start making accelerated progress towards net zero. And that's our goal. Please join us. I thank all the speakers today. We have another group, another panel in 7 hours. So if you want to invite your colleagues, contacts to it, please do. Those in North America that couldn't join, except for me from San Francisco at midnight, but more easily 8 a.m. in San Francisco, 11 a.m. Eastern time. If you want to tell your contacts, that would be great. And these are going to be another set of speakers: Vinnova, Cleantech Group from Boston, a large utility in HQ, Hydro-Quebec, Cycle Capital, the largest fund in Canada, and Foresights, which is a set of an organization that really help scale those innovations. So how you can join and support the movement before we leave is please take 1 minute to sign it, to sign the manifesto. We need to create momentum as we go to spread the world and bring more people to join. So I know you support this. If you're joined, please take the time to click on the link. Hannah, maybe you can post the link again in the chat and write your name. And please, in the comments field, please write how you can support any of the 4 elements. And, you know, if you want to be in the report, if you want to emphasize your startup ecosystem, city, your organization, or your company in the first global startup ecosystem report on clean tech, please email adam@startupgenome.com, or again in the manifesto, sign and write in your comments that you're interested in the discussion. And stay tuned for more between now and October when Richard's group will create will hold their Clean Tech for Europe event in Edinburgh. We will be building up more and more momentum with different activities. So thank you everyone for joining. Thank you, Frans, Nigel, Richard, and Paula, and have a good day.
Thanks for organizing.
And also, thank you. And also, we will send the presentation to everyone in an email, I think, tomorrow. Thank you so much.
Thank you.
Bye now.